Hi, and welcome back to the Brilliant People podcast by executive search firm Aptitude. I'm your host, Linnea Jungnelius. Today, we're diving into a fascinating growth story in global sport and how we understand fan value. My guest today is Gareth Balch, co-founder and CEO of Two Circles, the sports marketing and data intelligence company. They work with more than 900 sports and entertainment organizations, including the NFL, the NBA, Premier League, ICC, and World Rugby. And they process nearly 2/3 of all sports fan transactions globally. That means they analyze trillions of data points each year, helping rights holders turn audience understanding into real growth. We're going to talk about where that global growth is coming from, how fan data is being engineered into revenue, why private capital is pouring record investment into the space, and how he built Two Circles. Gareth, welcome to the studio.
Thank you for having me. It's great to be here.
Let's start with the big picture itself. You've called sport the, quote, world's largest religion, with more than 3 trillion hours of sport consumed just last year. What does the global map of sport look like today, and where is the growth coming from, and where are we starting to see saturation?
Sports is a religion. It has always been. It's been one of the stories for as old as humanity. But in a world where we're in a loneliness epidemic as a business and society, we are searching for belonging. And sports provides that to humans in ways that other pursuits or passions or outlets struggle. And sports has benefited enormously from that. To your point, 3 trillion hours worth of consumption of video where sports is the primary mechanism has been an insatiable demand growth over the period. It's 2.5 times bigger in terms of the number of hours of video consumed when sports is the primary mechanism than it was 10 years ago. This is amazing. An amazing level of growth where humans are pursuing the sense of belonging via the religion that is sports. And more humans than ever doing it, and they're doing it for more hours. And what that means is that it's a more valuable industry than it's ever been before. And that value is translating itself into this private capital that's coming into the industry, but also into how people are thinking about structuring and professionalizing sports. And it's becoming more and more sophisticated, particularly with the level of transparency that's available from the data age that we live in today.
And I think an interesting trend is sports has moved far beyond live viewing. And today it's being consumed right through podcasts, through clips, through gaming, and even background content through the day. So with that, how is this changing the attention economy of sport, and what's it mean for how value is being measured and captured?
The industry went from being quite a simple industry. It ultimately outsourced fans, sold live rights in simple ways to a small number of buyers, and it was great. And it rose through colour TV into the cable era beautifully. The internet came along and has brought more complexity and more opportunity to the industry. There are a myriad of ways that sports fans now consume sports, and indeed more people than doing it in more segments of society than ever before. There are 6 billion consumers of sports, 4 billion fans, so one in 2 humans is a fan, a self-declared fan of sports, and 1.5 billion of those humans are transacting annually in buying different parts of the industry. But those 6 billion humans I talked about are consuming a form of media. That form of media is more diverse than it's ever been before. And the way in which you both capture value from that, or indeed lose value from that to third parties, has grown enormously. So what we'll continue to see is that sports media rights have long been the primary revenue stream of the industry, generate about 44 billion of income annually for sports IP owners. And that's stretching beyond live. The social content and the ability to monetize that in ways that haven't done before. And that's been consolidated, particularly with new buyers and different buyers of sports media rights, which we'll continue to see a real evolution on. And the men's Champions League rights in Europe with Netflix and Amazon all rumored to come to the party is following a trend that started here in the US, where you've got YouTube and Amazon and others buying NFL rights and NBA rights, which is underpinning a future for the industry that looks very rosy.
You've started to describe this evolution that we're in, and you've talked about that as the third age of sports monetization. First came color TV, then came cable, and now we're in this era of streaming and data. What defines this new age and who's best positioned to win in it?
We are in this third age. The third age is going to be won by the people who have the biggest audiences. It's as simple as that. In the years gone by, there was a level of opaqueness that existed in the industry where the chairman's whim might affect whose rights got bought or sold for the most amount of money. Those days are increasingly of the past. What we live in now is a world where there's a transparency about where the asset value in sports is. And that asset value is based on a combination of audience attention and audience affection. And those two things, I can give you a data point on any sports property in the world on where they rank on audience attention and audience affection. Audience attention measured by the amount of consumption of all media, principally driven out of that $3 trillion worth of hours that I talked about earlier before. What percentage of that is going to the Packers or the Chiefs, or what percentage of that is going to hockey versus football, or what percentage of that is in Europe versus America? You can understand that intimately. And you can map that across to affection. And the affection is really important because sports is a passion industry. It's not a commoditized attention-only industry. And it does blend with the commoditized attention-based industry, i.e. it has an ability to pull large amounts of audiences in compelling time periods for things they love most. And that enables you to both extract dollars from those people and indeed people who want to get to those people's dollars.
Speaking of dollars, your Sports IP Revenue League shows that the top 20 leagues capture roughly 44% of total global sports revenue.
Yep.
That's a pretty staggering concentration of value. So when you think about that, what are those top leagues doing differently? And can the middle tier ever catch up?
Probably not, sadly. Or it depends how you look at it. Big ones should be quite pleased about that. So yes, last year, Sports IP generated $170 billion worth of income, and the top 20 of those generated 44% of that $170 billion. Remarkably, we think that 44% is actually quite unconcentrated. We think and we predict that over the next 10 years, that 44% is going to drift to nearer the 60%. And most mature categories in the world, be it airlines or financial services or supermarkets or take your pick, will have much higher concentration where globally, the few are going to be delivering more, and that's going to happen in sports. So the 44% is going to become more like 60%, and NFL sit pretty at the top of that, and NBA are in there, and of course MLB and Premier League and UEFA are all in there as properties who are benefiting in that top 20 from the majority of the $170 billion. And why they're winning? Because they're growing audiences fastest. It's as simple as that. It is straight up as simple as that. The reason the NFL is bigger than everyone else is it generates more attention and more affection than the other leagues. And in sports monetization, audiences deliver revenue. And if you can get a combination of your attention and affection and build a point of view and ownership of particular segments of the industry that are valuable to broadcasters and to brands, then you're going to see your revenues grow fastest. And the industry is going to continue to romp on. The interesting thing, just to indulge for a moment on the Sports Revenue League,
Please.
we're at $170 billion today. 10 years ago, that equivalent number was $110 billion. Sports has been growing at a 5% CAGR, and as I'm sure we'll come to talk about, the rush of capital that coming into the industry is you don't get many scaled industries that are delivering and throwing off this level of resilient year-on-year growth at around 5%, and we think that all indicators suggest that total sports IP monetization will be as high as $260 billion by the year 2033. And we're pretty clear about the level of consumption that will be there through the 6 billion consumers, or the 4 billion fans that are underpinning all that transaction and interaction that creates the value.
Okay, so the bigger are getting bigger and will get bigger.
Yep.
But if you do think about the innovative middle,
Yes.
who is doing it well? And are there examples of organizations or leagues that have found creative ways to scale without NFL budgets?
Absolutely. It's not NFL budgets that actually help them. It's NFL brands. It's the trajectory of what those things stand for. As budgets do help, of course, but they have inherent asset value. But yes, the innovative middle is a really interesting place. We did a piece of analysis on the 200,000 sports IP owners in the world. There are 200,000 of them. 170 grew faster than the top 20 last year. So there are people who are outgrowing on a CAGR than the top. The top are growing fast, but 170 are growing next fastest. And the non-mic drop moment in this whole piece is the reason they're growing is the same as the biggest reasons. In fact, the universal reason for everyone is those who grow audiences fastest grow revenues best and biggest. And therefore, those 170, of which you've got the likes of SailGP in there. SailGP is a fantastic example. College football playoffs are a great example of organizations that are sending growth through the roof. cricket is one of the fastest growing sports globally at a category, and within that there's a whole number of teams that are going great guns, including the 100, which is a $1 billion sports franchise built out of the ground in the last 5 years and growing really quickly. There is a wealth of sports organizations that are growing fastest, and the reason they're doing that, to repeat myself, is because they're growing audiences best. And really, if you scratch away at that, what they're doing is they're implying a level of intelligence and a level of sophistication to understanding their audiences, and especially in the innovative middle, they need to create a tribe and have a tribe of people who loves them and cares for them, that represents a certain place in culture or in society. And when those people find that affection, then from that tribe then compounds and grows. And when that happens, it doesn't have to be, it can be simply at thousands of people, or even tens of thousands of people. When that happens, value gets created. And that's where the innovative middle's winning. And actually what I've described there is the same playbook that NFL run. And NFL will just run a tribe called All Americans. All Americans are in on the gag of, let's make it America's sport, and within that, all the things that it represents around being American. And that's an amazing marketing position and takes you to scale because it's the biggest market in the world. Lots of the smaller organizations are just taking the same book and applying it on a smaller level. Okay, triathlon, smaller sport, but can you build a tribe around triathlon? Of course you can. Yep. Or sailing, to double click on SailGP. Sailing is amazing. There's a load of people in the world who are really passionate about sailing. I think, excitingly, there's lots of people who want to be part of that tribe that don't feel like they're a sailor. And if you can create a mechanism for those two things to coexist and then build a product and an experience around that, then you have the basis of something you might call SailGP, and that will be one of the fastest growing sports properties this decade.
Yeah.
So there's lots of opportunity for the middle and the aspiring small rights holders to all win if they become obsessed around audiences.
So we talked about the biggest ones, the innovative middle. Let's now shift over to the shooting stars like the IPL, the UFC, and even new women's leagues. When you think about those, what separates those that scale exponentially from ones that may be stalling out?
We're in an amazing for the shooting stars. What we're in an amazing time is how well funded that space is. There's been the creation of more new startup sports IP rights in the last 5-10 years than there have been at any other time in the history of sports because of the capital that's come into the space. So getting well funded and having a good funding partner is critical to do that. Women's sports is a really big part of this. Women's sports, ultimately, we were a category. Sports as a category was essentially ignored half of the addressable audience for the first 50 years of its time as an industry. So as we went through that colour TV time into that cable time in age 1 and 2 of the industry, we were ignoring half the world's population. And women's sports is just set to rip. It's going to go absolutely brilliantly over the years ahead. And that's about having the right investment with the real focus. Again, to repeat myself, the same tricks apply. How do I develop audiences that generate large amounts of attention and affection is absolutely the heart of how you monetize around that. But I think we'll continue to see women's sports go great guns, and NWSL here in the US is as well set as any of those sports leagues to really hit the heights of a shooting star.
Set to rip. I need to adopt that phrase. Because we brought up women's sports, let's go there. It's surging with record audiences and expanding investment, as you mentioned. Once that attention is secure, though, what needs to happen to take full advantage of how to commercialize it?
There are a bunch of sports in the world that have a lot of attention and not much monetization. So to be able to build modern commercial programs that represent how buyers want to interact with the sports is really important. There's a whole bunch of stuff you can do on media rights, and I could go into detail on that. But around the monetization of rights on behalf of brands is something where we think there's an enormous level of growth potential. Brands have essentially recognize the importance and the role of brand marketing for a really long time in their mix, and they're increasingly understanding of how sports can do that in a sophisticated way, and sports and entertainment. And I think what you're seeing is an increasing amount of sports rights IP owners who are able to garner the attention that we've talked about here and then start to package that up in a way that delivers outcomes and promises around what that can deliver for a brand marketing investment in a way that was previously more opaque. And the sophistication and accountability that comes with that, I think, is a major opportunity, particularly when you fuse physical and digital rights together. And I think that's an opportunity that the industry's been on the cusp of for a long time, i.e. the sponsorship industry, and is now starting to take in its stride.
Another thing that you've said is, quote, sport doesn't have too much supply, just too much of the same product. Love little controversial statements like this. Which sports do you think are most ready for reinvention, and what innovations could unlock that next wave of growth?
Cricket's a great example of why this is true. There's a lot of cricket in the world, but there's increasing amounts of different varieties of flavours of cricket where you have different formats of it. There's a lot of tennis in the world, lots of very similar type of tennis. More variations in the type of tennis would help the world love tennis more, generate more attention from it, and also generate more revenue. Track and field is another example. There's lots of very similar types of track and field meets in this world, but actually segmented up aspects of that product and delivered in different ways could take us to a really interesting place. And golf does this really well. Like the Ryder Cup is golf, but it's beautifully different from what I see every week on the tour or indeed at a major. And so how do we create these different flavors of sports that can have it grow? Now, the biggest sports haven't needed to do this historically. Pro tackle football is pro tackle football, and we call it the NFL, and it's amazing. And there's really only one flavor of it. And actually, people have tried to do other flavors of it, and it hasn't succeeded. I actually think one of the big things that will happen over the next 10, 15 years is we'll see that diversify even in the biggest sports, be that soccer, as you might call it here, or American football. American football will diversify into flag in a way that will expand its audience, grow its TAM, increase both pro tackle football, but also flag football in a way that will be symbiotic within the mix of consumer products. So we're going to see a continued diversification in the formats of sports, which essentially, if you think about it like an FMCG company, they sell washing powder. Unilever have 181 SKUs of washing powder because they're servicing every segment of the fan to be able to maximize their value from that. Sports has not done that very well. It doesn't need to be quite to the extent of washing powder, but it'll be more like it in time. And the emergence of, say, flag alongside American football is a great example of where we'll do that.
What I'm hearing is know your flavor. Obviously, that's rooted in knowing your audience and who you're trying to attract best, what the culture of that tribe looks like, and how can you then bring that to life digitally, physically, all the various ways that you just talked about. And that's all rooted in, quote, knowing your fans best, which is something that Two Circles has become known for its ability to help brands do. Being that you process so many of the transactions in the space and are able to analyze all these data points, which is coming through so clearly, how do you work to turn that into real, tangible value and kind of do the engineering for growth using that data?
Those that know fans best win biggest. That is just universally going to be true over the next 20 years, 30 years. It's been true ever since the emergence of big data or the internet or whichever bit has allowed us to have complete transparency.
Sports or any industry.
Any industry. What I'm talking about here is sector agnostic. And sports had, the exciting thing for sports, it had so far to come because it was such a who business, not a what you know business. Historically, sports is increasingly becoming a who you know and what you know business. And that what you know is born out of. Once you've got this holistic, wholesome picture of your fans relative to the market, it becomes blindingly obvious to figure out how you grow it. It's, oh yeah, of course I need to do that. And you move past the strength of opinion, or maybe more historically in sports case, the sort of the anchor of tradition. And sports is very anchored on traditions. And that's a real strength. But it also means that it can miss opportunities to service what fans want going forward, particularly with the level of consumption change in media that we're seeing through different cohorts and different generations in the fan bases. So we do it in a whole myriad of ways. To give you some tangible expenses, by knowing your fans best and how that compares to the market, you'll recognise that the way that premium experiences in live sports events is changing is radical before your eyes, and you need to massively outweigh the number of premium experiences relative to general experience previously. You'll also recognise the desire to pay for a general experience is, the inflation on that is going through the roof for really good reason, and some people get cautious about that, and you shouldn't be. If you really understood what was happening there, you'd know it was more valuable to your fans than ever to have that live communal experience, and they'll pay for it if you deliver value. So don't give me the product I had before, give me a little bit more. Those brands want a blend of a physical and digital buy with brand experience right at the heart of it and accountability, i.e. outcomes that you can stand behind that enable them to prove where it sits in their mix. Sports can do that better than ever before, i.e. all the passion points of sports that made sponsorship valuable decades ago continue to be true, but we need to place right at the heart of that is a level of sophistication about the outcomes you're coming up.
In order to take advantage of that data, obviously you need the data foundation. I'm curious, when rights holders come to you and say, I don't really know my approach to data, or I need help with my approach to data, how do you direct them to get started?
Ask them what problems they want to solve in their business, and then you apply that problem into the method of go and aggregate the information around that. Or you might already have it. In fact, nearly everyone already has it. They just don't realize they're sat on it. People get lost thinking this is a data scientist quant challenge. It's none of those things. It's the same challenge it always was. It's a business question, simple, thoughtful question. My problem's this. I would love to get there. How can I get there? And the tool to get you there is the application. If it's in any way related to audiences or commercial in the world of sports, then there's a wealth of data that's available in the world to understand how you can then demystify that question and get after it. So we very simply take it back to first principles that you'd learn at business school, as opposed to getting lost in my CDP or my DAM or my CRM. All of these things are relevant tools you might need, but you can get very sucked into the technology aspects of this. You can't do any of this without technology, but it is an enabler for you to succeed. It isn't in itself the end game. The end game is, give me a business question, give me an outcome I want it to get to. I would like to grow my sponsorship business, or I would like to fill my stadium more often, and then from that, there's a world of knowledge available.
So start with the end in mind. This always comes up. That helps you to get focused around what questions to ask, then put the data in place so you can understand.
Yes.
And that creates the flywheel for really momentum and growth.
It's really quite simple.
Yeah.
We've got hundreds of data scientists in 2 circles. They need the clarity of a clean question. And asking a complicated question ruins it.
What's a good, clean question to ask, you think?
I would like to have a sold-out stadium by 2028. How do I do that?
Yeah.
The data can flow from that. But if you come in with I'd like to have more of this type of person in my stadium, is that actually what you want? Or do you think that's what you want because that gets you more people, but that might not actually be the best way to get there, and you contaminate the question on the way through? So stay at the top of the logic tree, have a clear business outcome that's going to make a meaningful difference in your boardroom, hold that as the question and apply that to the algorithm, and you get a really good answer.
It seems like for years, a lot of sports organizations have leaned into performance marketing, but I think there's an interesting moment now where rights holders are looking to rebalance the media and the sponsorship side. And how are you thinking about that now that both measurement and personalization are maturing like you're describing?
Yeah, I think it's really interesting. I think it's great that we've got over our addiction to performance marketing in recent years. We were over addicted to performance marketing. Marketers have a tendency to have a herd mentality and follow each other. And the ushering in of the platforms that Google and Meta brought to the world ushered in an over-reliance on performance-based marketing. We're starting to see a rebalance, and that's a good thing. It's really good for sports too. And that's going to take us to a place where we actually get better marketing outcomes, because this addiction to spending more money on performance marketing, of which there's been a 2.5x increase in spending advertising by all brands in all sectors over the last 10 years, hasn't resulted in equal levels of top-line revenue growth for those advertisers. I think we're going to start getting back to better return on investment for those that invest smartly in advertising.
And what about leakage? How do you think about the value that's escaping to tech platforms or intermediaries? And where do you see the biggest gaps around how rights holders can recapture that value?
So if you're sitting there as a sports IP owner and you're thinking about leakage of value, then what you've got is a lot of attention being monetized by somebody else. If you're a sports IP owner, that's like the worst thing that can happen. The biggest place that's happening is in piracy. So piracy of video rights. So there is a major problem in the sports industry where there is difficulty to regulate and protect against the piracy of video rights for people illegally streaming sports rights. And that is the single biggest area of leakage. But the leakage is happening all over the place. And in some ways, it's not illegal at all. And it's just an opportunity to become more exhaustive in your approach to monetization. And the rise of mixed-use sports developments or mixed-use developments here in the US is a wonderful example of this, where people for a long time have realized, that land that's right outside Fenway Park is really valuable real estate, but other people are monetizing that. And what you're seeing is, whether it's the Fenway Sports Group or indeed a whole bunch of other professional teams, they are increasingly owning the real estate around them and building these mixed-use developments that's redefining their leakage of their physical infrastructure, not just their digital infrastructure. So what we're seeing is an increasingly sophisticated approach to monetizing sports rights in every which way, and be that through the management of illegal streaming or be that through the monetization of mixed-use developments. We're going to see more and more capturing of value that's being created by the IP owner but monetized by somebody else. We're going to see that displaced across. And I talked before, to put some numbers on it, of sports generating $170 billion a year. There's the same again is generated in value by other people of my rights, or the rights that owner has, by somebody else. And that number's going to underpin a bunch of the growth in the next 10 years.
Let's talk about this incredible wave of private investment that's coming into the space. We've got a CVC that just launched a 14 billion euro global sports fund. You've got Apollo that's got a $5 billion sports investment vehicle, plus Arctos and Sixth Street and Rain, et cetera. What's driving this influx of capital, and where is the smartest money focusing right now, in your view?
The institutional money in the world turning its attention to sports, and within that sports and entertainment. We're going to continue to see this trend for a long time to come because it's working. It would go away if it wasn't working. And it's working because sports has risen from relatively unprofessional and unscaled to being professionalized enough to be able to take on institutional investment and scaled enough to be ready for these large cap and established institutional investors to come to the party. And to some extent, that professionalization has enabled the ability for minority and team investments in the pro teams or indeed the creation of commercial codes in federations around the world that have created the monetization. For example, that F1 have been doing for a really long time. Like F1 was way before its time in the way it's done that, and people are replicating versions of that models at this point. So it's going to keep happening because it's working. It's working because there's not many scaled sectors in the world that can promise consistent 5% plus CAGRs for a long time to come. And the growth part of the industry is actually going to be nearer 10%. And when you can deploy billions of dollars in resilient 5 to 10% categories in the world, you're going to deliver yourself really good multiples in there. And the multiples are starting to establish themselves at a level that represents the value that exists. So for a long time to come, this is going to happen. You've got to be really smart about how you want to structure that. There's lots of ways you can do it that it's ineffective or muddies your cap table or indeed injects capital in a way that actually doesn't have a use case or indeed a return profile or horizon. But there's many more ways that are going to be successful for institutional money to come in.
If we pulled up a seat here, we had a fund or family office sit with us today that's trying to get in on this action. What advice would you have for them on the things they should work to understand before writing a first check?
This 101 investment principles. You want relationships and knowledge to be able to do these things effectively. Don't allow the passion benefits of the sports industry, because you should invest in something you care about. Ultimately, it's always a good thing to work off that. But sometimes that passion aspect can overindulge in some aspects. So hold back that and keep the rationality in play and don't let the passion to take over. And then get a lot of knowledge, and there is a lot of knowledge on this sector, and indeed build the relationships and understanding to know that you can both enjoy the working relationships that will come from that investment and have the knowledge to get you a sound return is the 101 investment advice I'd say in that regard. The family office, what I'd also say, and this is a less capitalist thing to say, but it's important, is the good that sport does in society is unparalleled. To your opening point around it being a world's religion, the ability to be able to do something that both delivers a capital return and drives such social good in terms of the benefits it has on all corners of society, I think is well understood. And the combination of those two things enables sport to continue to drive growth, but also drive good. And that good ultimately will underpin the really long-term growth of the industry for a long time to come. So the balance of that's important.
I like that idea around both purpose and profit. Again, you mentioned earlier this loneliness epidemic that has happened, and the ability for sport to solve some of that. And again, also grow tremendously as it gets more sophisticated and mature. As you think about 5 years ahead or where the next big wave of capital is going, do you see it going more towards leagues and franchises, more towards adjacencies like tech or data? Any thoughts around that, or
all
data?
Of the above. They're all, as my friends might say in investment banking world, I think they're all white hot. And they're going to stay white hot for a little while. I think sport adjacency I've benefited from it as within two circles, is going to continue to be really strong. And there's lots of data points in the market recently of that happening with an ever increasing range of really credible scaled buyers in that space. But sports IP is the centerpiece of the industry and will be the place to really stand, and is the top of the food chain and will yield the biggest multiples and the greatest returns in the end, I think. So sports IP is going to continue to go really well. Now, whether that's established IP or new IP is actually, and to continue back to your kind of big getting bigger or your innovating middle or your shooting stars, the people who can buy in the biggest sports IP in the world and be part of that, I think are going to do best. And you don't have to go and find too many NFL owners to hear that story.
Incredible insights on the space. I want to talk about where all these insights came from and how you built this business that's able to extract all this value. You've described two circles as your life's work. What was the defining moment that helped you to see that this was the thing that you wanted to go and build?
We started the business in 2011, so we're 14 years in. So my life's work's got a long way to go yet, but that's part of the fun of it. Painting the Sistine Chapel we've only done a couple of the sections so far. I was 27 when we started the business, and it was really obvious to us that wouldn't it be cool if we were able to map every transaction and every interaction that a fan has with something they love. That just struck us as a really sensible thing to do. And I used to be an athlete myself, so I had a passion for sports. And when I was a runner, anyone who knew me when I was a runner would say I was always forensic or analytical in the way I wanted to understand how I could run around the track faster, because that's what I needed to do. And it just made sense to me that you would break that down to component parts, you'd make every bit better, and that would funnel back up and the whole thing would go faster. And that's essentially the approach we've taken to monetizing sports rights. Forensic, detailed, data-driven understanding of how sports rights are monetized, and then democratizing that data so everyone can know their fans best, because that gives fans a better experience. That's good for the world, and it gives owners a greater return. That's good for clients. I like helping our clients.
What's the next thing where you're taking the business, or the next layer of analytics that you're hoping to get deeper into?
The predictive analytics has always been the future. It's like, how can I understand which indicator best suggests what's going to happen next? That predictive analytics isn't a new concept, but it's not going to become an old one anytime soon. It is the end game. The ability to understand where causation happens and not be lost in correlation is a really big part of our game. We're some of the best people in the world at being able to understand that. Prediction is everything that happens, and clearly with the scale of models and all the things that I loathe to say it, but AI brings to the world, what it does is just ushers in a new era of power that we can apply to the models that we build.
How far along is that? Is it probabilistic at this point? Is it deterministic, or where are we on the journey?
We are in chapter 1.
Yeah.
Like, we're still awash with data that we haven't figured out how to structure, and we're still figuring out how to get the integrations to work well so we can get to a clean data set to apply an answer to the clean question. Like, we're in chapter 1. When people look back on the sophistication we're applying right now, so when my children's children are applying these techniques in due course, they'll be like, that was really basic.
Yeah. Honestly, hearing you say that, I'm sure will make a lot of presidents and owners feel like, phew, give a bit of relief, because I think everyone always feels like everyone's so far along, but it is a journey. And
it is. Although I don't know, maybe some people will feel relieved. Other people might be intimidated. It's already like getting ahead of me, and there's already more acronyms. It's the only way to do commerce. And anyone who doesn't do commerce in this way will ultimately die out, literally.
In those 14 years that you've grown the business, you've integrated 8 acquisitions, and all have exceeded its plan. Talk to me about what you've learned about integrating rhythm, integrating culture, and just keeping founders happy, like post-acquisition, and how to do that.
We're a client-centric business, but we're a people-first business. And in a business like ours, you can walk around and suggest those two things can coexist, and you don't have to know which one's more important than the other. But in our business, we're really clear that our people matter most, and we look after our people so they can look after our clients, because we are client-centric. But we do that through being people-first. And so in an acquisition land, is that on steroids? It's like a hiring process, but en masse. I need to ascertain or determine whether this group of people can coalesce and coexist with this other group of people we already have in a way that is fun and enjoyable and human and brilliant and brings love. And that's something we've done really well. We're really proud of what we've done from an M&A point of view. We've built a one-team approach with a one brand above the door and one approach to how we service our clients and one approach to how we look after our people. And it's been an enthralling process to go through and a journey to be on. And it's people first, is the short answer.
Yeah. People first, then you've said sort of spirit eats strategy for breakfast. Talk to me, like, what does that actually look like inside of the company? And also, how do you keep that alive across continents? Because you're growing a lot also right now in North America.
We're learning on that. So we've got 1,100 people. We once had 1. And I remember every step along the way, and what we've done at every turn is gone, for as long as we care about our spirit, what other companies might call their culture, is for as long as we'll have it. And as long as we embody it and pass it on to those that join us along the way, then they'll share that. And you have this kind of compounding effect through the community that is Two Circlers, where there's a shared set of values and a shared set of ways of doing things. That is the spirit. The spirit of Two Circles is an intangible sense of a feeling. I sometimes talk about it as a feeling of being on the best sports team I've ever been part of. That's the kind of, if you imagine whatever sports team you played in, whenever you play competitive sports, you've been part of a great team about when you win well together or you lose well together, and you give feedback well and you suffer well and you celebrate well together. All those things that are like the best bits of being part of a sports team. Imagine that happening in a workplace. I think that's a really cool idea. And we've basically been working towards that idea. And it's a North Star, and it's not real every day. And on one wet cold Tuesday morning. Doesn't always feel that, but it doesn't always feel right every training session you go to with your sports team either. But the aspiration is there, and it's become something that's really guided us, embodied us, and we care about it, which means we invest time in it. This year in Two Circles, I think we do 58 team days, which means there's a day set aside 58 times anywhere in the world where we're going out and we're playing sport together. And we're talking about our company and we're talking about how we can be a better team. And we run festivals where we bring the whole company together and put on a big party for a couple of days. Or indeed where we do performance planning, because performance planning is a really big part of it. If Roger Federer needs a coach, everyone needs a coach. And therefore every Two Circler gets a coach or a manager, as we talk about it. And that manager sits down and gives feedback and talks about how we're doing. And some of those things are everyday things every company does, but the level of energy and care we put into it and frequency we put into it and the responsibility we place on it is far greater than you find in other environments. And that enables us to create a high performance, people first environment that has a real spirit to it. And that spirit, I think, is deeply important. If you're going to provide employment to somebody, then you should also provide purpose. And because purpose is a thing that every person needs and every person thrives with, and we endeavor to make that happen.
I think that energy that you talked about is the secret weapon for many businesses. You can't replicate it, but you certainly feel it when you enter organizations or you put a new leader in place and you see the influence that they can have on a business's growth trajectory. And also suffering.
Yes.
We all have to learn that fun lesson.
Yeah, we do.
Let's talk a bit about how you've approached building your executive leadership team. What was that journey like? And has your idea of the, quote, ideal hire changed as you've scaled up?
Actually, the ideal hire for Two Circles has stayed very similar for a long time. We hire people who play team sports. We hire people whose eyes light up when they talk about sports. We hire people who have strong academics. We found that to be a really good indicator. There's a lot of causation around that, ability for them to kind of be a great high performer. And we hire people who have a deep level of curiosity for the business of sports. And you can test that really easily. You just start a conversation and you see where it takes you. What do you when you sit and look at the advertising that sits around a sports broadcast? What do you think? How do you do that? And you see where it gets to, and off you go. So actually, those fundamentals that we have in our hiring process, they've been the same since the dawn of time in a Two Circles world. But absolutely, you evolve, you learn how to hire well. So we've hired 1,000 people, more than that now in our time, and you really do pick up different skills about how to do that well. And I've become much more precise in our hiring. We hired entirely on attitude, not on aptitude early on. But as we've got bigger, we found the need to be able to hire more on aptitude for specific problems we're trying to solve in our business. Whereas in the early years, and lots of these people continue to be the people who lead our business today, we hired entirely on attitude. And there's a real blend of how you get these things right, and endless books have already been written on that topic. And we're on our own journey to continue to strike that balance right at different times.
And what about on the executive leadership team level? What types of people do you surround yourself with? And any reflections as you've think leadership teams over time or teams you've seen on what truly makes an exceptional leader just from maybe simply an experienced manager, right?
Yeah. The number one thing I care about when hiring my executive team is people I'm going to love spending time with. It's always the most important thing. You then want people who are going to have the shared values of what our business stands for and how we make 1,000 decisions a month as a leader. It's 990 of those decisions everyone will do fine on. But those 10 decisions are the ones that really stand out who you are or what you stand for, and they're the things you want to test for and really get right. And so we're really ferocious about making sure we all approach those in the same way. Not the right way. There's no right way. Everyone has a different way, but our way. And how do we get those in our way in a way that works for our spirit? And what our promise is to our people and our people's promise to us, that all needs to be born out of that same set of values. So we test for that a lot when we're hiring, and we find people who have that intrinsic value. But we also want people, to the point around it being our life's work, we want people who want to come not for a job but for the journey. And so we're really motivated about finding people who have either demonstrated that kind of commitment or desirability to be part of something, to realize that anything good in life takes time to do and you can't do it quick. And I want to come for a journey to be part of that and have all the purpose and the depth of relationships that come from building a company with somebody. So it's amazing that our COO or our group managing director or our whole rooms of people are all people who made those decisions, who all had brilliant careers before they joined, but are now 10 or 11 years into their journey with Two Circles and thriving in their fifth role in the company that's not defined by their job title, because that doesn't mean anything in this instance, but just defined by the purpose of what they're doing as we go through the chapters of our growth.
And what about when you think about the pattern recognition that you've done across recruiting?
Yeah.
Have you added any specific tools, frameworks, practices in your recruiting process that's helped you over time to get the hires in place faster and at higher quality?
Our talent director is one of those people who's chosen to come on our journey, and she's exceptional. She's been hiring with us and for us for 12 of our 14 years and been in the company for the last 5 or 6 of those years. And she brings amazing tools to that. And actually, lots of the tools in that have as much been about how we diversify the demography of our workforce as they are about finding the right type of people. We found a type that we liked a long time ago, and then we found that type brought us the same type of demographics, and we wanted the type of personality to stay the same, but the demography to diversify, if that made sense. And so we've made real steps to be able to retain the type of person we like, the person who thrives in sports teams, and the person who thrives under challenge, and the person who thrives for a growth mindset. These things have got nothing to do with who you are demography, but we like those people, but we were finding ourselves hooked into always having them come with a similar demography, and we've shifted that vastly over the last year. So we had 212 people this year, and 48% of those are female, which we're really proud of, and 26% of those are non-white. And none of those were targets they were set, but they are metrics that we measure to make sure that we build a workforce that reflects the audiences we're serving. We're serving billions of sports fans over the world, and our workforce needs to represent what they and who they look like.
Always a great lesson there around diversity and how it makes you not only scale up as a business and access great talent in lots of different pockets of the world, but how then that actually translates into commercial outcomes through more diversified thinking, better connections to your fan base as the business.
Yeah, totally.
Let's pivot more to your personal performance.
Yeah.
That was a great overview of how the business has grown and evolved over time. But as you think about your non-negotiables for showing up as your absolute best self, day after day as the leader of this business, mentally, physically, creatively. What are your non-negotiables?
Or fail, because you want to do the things you said, but we rarely do. That failing well is really important. How do I put that into practice to give you some practical things?
I want to fail better. How do I do it?
Well, working on it. Don't send yourself down the doom loop. Be kind to yourself. It's probably the hardest lesson I've had to learn is how to be kind to myself, because you can just beat yourself up endlessly. I have a couple of rules around managing energy. Is one of the most important things, I think, to be a high performer, because your energy doesn't stay the same at all times. And also, all adaptation happens when you rest. Yeah, that's 101 in athlete land, but it should be 101 in the workplace as well. You don't get better as an athlete by training. You get better by an athlete by resting post-training, and that's where the adaptation happens and you come back stronger. The same thing happens in work. And in the workplace, clearly working hard matters. I'm a workaholic. It's one of my challenges. I'll come back to that later. But I make sure I have 36 hours off at least every 7 days, or I don't work. Now, do I not look at my emails? Maybe not. But what I don't do is calls or structured work in that 36-hour window. And if I've noticed, if I can do 7 days straight or 14 days, whatever, you do that, but you just notice energy levels go like that. And I realized that if I do 36 hours of clean time every 7 days, then I can sustain a really high level of intensity or a level of intensity that I value for a prolonged period of time. I can go 12, 14, 16 weeks without a week off just by keeping that gap in there. So you find those energies in there. Some of my other rules are I don't work when I don't want to. Simple as that. I follow your natural energy. Work when you want to work. And don't when you don't. Now, I'm a workaholic, so that means I stand on the right side of that in terms of getting a lot of stuff done most of the time. But therefore, also be kind to yourself when you don't want to work. I think it's a really important way that enables you to stay higher energy more often than you are. I could keep rolling on this, but you find these things over time where you notice these patterns. And I'm a really big fan of journaling as well. Journaling is a really important way to get a feedback loop. It just helps you. I used to, when I was a runner, again, journaling is a really big part of a runner. There's a big part of me that never stopped being a runner. But when you're a runner, you do something great. And then you look back on it with rose-tinted glasses over time, and I did that, and that was amazing. I want to do that again. But you forget that 4 days before that, you felt rubbish and you had a bad day. And so then you're having a bad day 2 years later, and you're like, oh, a bad day, nothing great's going to happen tomorrow. And you're like, no, actually, I need to go back and realize that 4 days before I did something great, I had a really bad day. And I remember my personal best 4 days after having a really bad day. And it helps give you hope in that moment where you're like, oh, I'm just all a bit today. And anyway, all those things. So the feedback loop of journaling, managing energy, all these things I think are really important to trying to be the best self at all times.
Yeah. If you ever fully figure that one out,
Yeah.
you let me know. I think we're all on that journey to some degree for
Just getting
ourselves.
better.
Yeah.
Exactly.
But I do think your point there is really good around the importance of recovery. And it's interesting being in the world of sports.
Yeah.
I think you hit on something really important there. You see it with athletes.
Yeah.
Maybe it's the coaches that's helped the athletes to embrace that, because when you are a go-go person and very ambitious with your dreams and what you're building, and especially as a founder and entrepreneur, it is really easy to just go round the clock.
Yeah.
But reminding yourself, take the moment, be in it for the long haul, and it's going to help you to go fast for 5, 10, 15 years, not just this quarter, this year. Because I think if you do that, burnout can be inevitable in some cases.
I think it's entirely avoidable.
Yes.
Yeah.
Okay, you touched a little bit on this, but any other lesson that took you the longest to learn as a leader?
Being kind to myself is my longest to learn lead lesson. I struggle with that. I just beat myself up when it doesn't go as well as I want. I just don't need to.
What helps you to pivot back faster, though?
For me, it's the recognition of that loop that I go into and then realizing no good comes from it. And so giving yourself, it's all 101 psychology stuff at this point, giving yourself cues to get yourself out of doom loops. And again, I return to my athlete piece on here. A psychologist taught me really on, how do I manage myself on race day? Managing yourself on a race day is a really important thing to do, right? You can lose the race in your head before you start. It's self-evident. The same's true in any pitch you go into, any meeting you go into. So how do you manage yourself through that? And so small cues to do that. So one of my favorite cues that I have for myself is don't suffer twice.
Talk to me about anything you're reading or listening to right now that's shaping how you're thinking or how you're evolving your insights around the space.
I read Michael Ovitt's autobiography last week. He was a founder of CAA and did an amazing job and built a generationally defining company. I think CAA is a fantastic company. And so I loved reading his story. I knew it in dispatches, but when you sit and read it, I think it's amazing. I always find personal stories about founders and entrepreneurs to be inspiring. So I love that. I also read a book last week it's a newly published book about Augusta principles. So the Augusta National Golf Club is an amazing everything, brand, institution, members club, everything in between, and host of golf events. And it's an organization we've got to know in recent years, and they're amazing at so many things. And sitting and reading about the codification of how Augusta is so special and why the world can't be more like Augusta, or specifically the Masters more often, I found enthralling. So I really enjoyed that. The other thing I'm reading and doing lots of at the moment, I'm in love with the Acquired podcast. I know lots of people are in the world and it's doing great guns, but I've particularly enjoyed using it to learn about generationally defining companies, leave a mark on an industry that's far greater than it's reasonable to expect any single company to do, and that lasts way beyond this decade. And I think there's amazing stories on there. Learn about the IKEA story, or learn about the Porsche story, or the Visa story, are all things that I've enjoyed listening to recently in the back catalogue of Acquired.
And what about any media, podcasts, or content that's more part of your day-to-day?
Lots of the industry stuff, but I like that stuff. I find less, it's good, it's news, but it's not as developmental, and I'm really into the developmental stuff. SBJ or Sportico, all these things in our category are amazing sources of information, but the depth that you get from other sectors I think is really interesting. And one of the most interesting things sports needs to do is continue to learn aggressively from broader categories.
And what about the people you're watching closely right now? Could be an operator, an investor, an entrepreneur, but anybody that's doing brilliant work or shaping what's next?
So I think a lot of the big institutional investors in sports are some of the smartest money and brains in town. So everything from people you mentioned earlier, like CBC, and what they're doing in this space and how they're pivoting with the investments that they've made into their newly formed venture called GSG, I think is fascinating. And I think those people are inspiring and lots to learn from those. But there's so many other operators in that space. A number of our investors in that world are amazing. Ultra Capital, who we're doing so much with at this time, they're brilliantly smart people and wickedly ambitious about how they can make the industry better. And I think there's so much to learn in that space as well. There's also amazing operators in sports teams they're bigger than their roles. They're as big as the club in the sense of what they do. And there's a bunch from where I come from back in England that have done amazing things, like Richard Scudamore and what he did for the Premier League is a great example of leaders or role models that set a higher standard and that lead us to think about how we create value for sport and not just from sport. And I think that's a really important thing to keep at the heart of how the sports goes through this third era of monetization.
At Assertitude, our tagline is brilliant people at work. So I have to ask you, who's the most brilliant person you've ever worked with and why?
There's so many amazing people at Two Circles. I would be loath to choose. And we've had so many amazing clients. Our partnerships with clients, they're based on that collaboration, and that ways of working together is amazing. If you force me to pick somebody, our chair at Two Circles is a lady called Liv Garfield, and she's an exceptional and magnetic human who brings energy and clarity and drive and positivity to every situation and helps us think we can achieve all our goals as a business. And she's one of the busiest people I know, and she's always got time. And it's an amazing skill to be as organized and clear and thoughtful and caring, and when you're doing that across so many things. And I find that very inspiring.
So I'm going to hit you with our final lightning round with some quick instinctive answers.
Very good.
Let's start. Purpose is
belonging.
Leadership is
role modeling.
Success is
in the journey.
Brilliant leaders are 3 adjectives.
Brilliant leaders are kind, ambitious, motivating.
I perform at my best when
I perform at my best when I'm happy.
Gareth, this was such an amazing conversation, not only about where the industry is going and how to engineer revenue using data, the intelligence moats that you're sitting on, but also just how to lead and grow a business and be a good role model and inspire the people around you. So thank you so much for the stories, the examples, the insights, and would love to have you back sometime.
Amazing. Thank you for having me on. It'll be a pleasure to come back.
Thank you to Gareth Balch for joining us on the Brilliant People podcast today, and to you, our listeners, for tuning in. If this episode sparked an idea for you, please subscribe and rate the show. That way we can bring even more brilliant guests to the show. And follow Assertitude on LinkedIn for how to lead and perform at your best. Until next time, stay brilliant at work and know your fans best.